Okay, it is the 8th of September, and I am recording this for the Forex group in the event that I can't make the meeting. But anyhow, I'm just going to run through some of the pairs or some of the setups which I like over the coming weeks. And so this is Anthony, and I am a medium long-term trader, normally looking at minimum of a 4-hour chart, so preference 4-hour, daily, weekly, and monthly. So just take you through some trading ideas which I'm looking at. And again, this is just my opinion, not particularly professional advice. It's just what I think is of interest. So, looking at the Aussie dollar. With the Aussie dollar, what I have done is I set up a composite index, which is similar to a US dollar index, but looking at the major Australian pairs and basically adding them all up and then dividing them by the appropriate number to get an average of the Aussie dollar performance against those pairs. And what we have in that equation is what we're seeing here on the graph. So this is what I call my own homegrown Australian index. So the Aussie dollar against major pairs, and this is on the weekly chart. So I compare the Aussie Euro, Aussie USD, Aussie New Zealand Pound, CAD, Swiss franc, and yen, and then I divide it all up, and that gives me a quasi index. So that gives me a good indicator of the overall strength of the Australian dollar. Where we are now is we were trading sideways for a while, and now we are in a clear bearish channel downwards. We have kind of touched the support level around 0.72, so in the support region of this index, which is around 0.73 to about 0.66, and we have a small bounce on the Australian index. We do have divergence on the RSI, so higher low with compared with the index. However, the channel is still bearish, so the overall Australian dollar against major currencies is still predominantly bearish. So that trend is even more visible in what I like to compare the Aussie against, which is the Singapore dollar. Singapore dollar is actually a safe haven currency. It's not frequently traded, but I like to use it against other volatile currencies because it gives me an indication of the volatility, because the Singapore dollar tends to have a very narrow bandwidth, so very minimum volatility. So it's easier to see the clearer trends. So what we have here is the Aussie versus Singapore dollar for the weekly, and you can see a clear bearish trend. So this is something I like to trade. When it touches the top of the channel, I short it. When it touches the bottom of a channel, if I choose to, I can buy it. However, I do prefer to trade with the trend, and the overall trend is down. So if I were to be buying this, it would technically be counter trend, which I prefer not to do, and I wouldn't generally recommend unless you're a more advanced, experienced trader. But it makes more sense to go with the trend, and with the Aussie dollar, the trend is bearish against most major currencies. And with the Aussie Singapore, I like this channel. It hasn't been broken yet. We're still in that defined channel, and the channel is still holding at the parameters. So this would be a good shot if you were to touch the channel. So I'll be looking for a shot there, and then I'll potentially exit on the bottom channel. So when we tap the upper boundary, I would short it, and when we tap the lower boundary, I would close the trade. So overall trend for Aussie dollar is bearish against major countries and even the Singapore dollar, which brings me to another trade setup which I like, which is the Aussie New Zealand. Now this looks a bit messy, but I'm gonna go with a technical analysis on this and go to a monthly chart, and you can see there's a strong clear overall trend. With the Aussie New Zealand, we're in a triangle, which has been since 2015. So we've been consolidating in a triangle, which is growing in a narrow range, and you have this compression, and we finally broke out the triangle. We broke out in January of this year, which is very bearish. because this is a monthly. Each bar is 1 month. So when you break out of a triangle on a monthly, you would expect to at least test this low, which is $1 against New Zealand. So what happened? We broke out the triangle, we back tested into the triangle, which is this green bar here, failed the back test, and then went very low. We hit about 1.01. And we tagged another major monthly trend line and bounced off that. And we've been kind of going sideways since then. Each bar graph is a month, so that's like 6 to 7 months here. And what's happened now is we had a bullish correction move, and we tagged that upper trend line of the triangle. And now we're tagging it again. So where's the trade opportunity? For me, there's a potential short here, because we know this trend line has been holding significantly for many years. If we close above this trend line for the 1 month, so for the month of September, if we close above this green line, I would see that as bullish. So that means we have broken out the triangle, it's a false breakout, and now we would likely see a bullish extension. So closing above back into this triangle would be bullish for the Aussie dollar. However, thus far we have a rejection. Although we're not at the end of the month, I see a good trade setup here for going for a short and setting my stop just above this high, which is around 1.073-ish. So I could set about 1.075 around there. So I got a clear defined stop loss. I have a good support line, which is the major trend line for a monthly. And generally major trend lines over a longer time frame tend to hold. So good trade setup, which I feel. And a lot of downside. I still would like to see this low tested, and we haven't done that yet. We tagged just above it, but I would like to see $1 tested, and I think my lean is that we will test it. So I'm putting this trade at a 70-30% probability. So 70% is my lean to the downside, and I want to see this low tested in the next. If this back test of this monthly triangle fails, which I'm hoping it will, I would like, if we fail this back test, we're likely to go back down and retest this bottom, and then we'll see. If we break this low level, then it gets even more bearish. But we'll cross that bridge when we come to it. But right now, my setup for this is bearish, short with a stop above the green triangle support line. And yeah, so that's it for the Aussie dollar. So we know from the Aussie index we have a clear bearish trend. The Aussie Singapore dollar also shows a bearish channel trend, and I'm taking advantage of that bearish momentum potentially in the Aussie New Zealand based on this technical setup. Now, is there any fundamentals I'm drawing to this? Not so much. With a cross, like Aussie New Zealand cross, it's more of a technical play. Having said that, what I like about Aussie New Zealand is it's a very technical cross pair. You're not going to get influences from Trump or any US dollar movement or any riots in Hong Kong or China so much. If there are influences from China, it will influence both parties, Australia and New Zealand. So fundamental influences are kind of buffered out considerably, especially global fundamental stuff, particularly with the US influences. So I like this kind of trade because it's more technical, and I don't have to worry about a potential Trump tweet wrecking my trade, which has happened to a lot of traders these days. So yeah, that's it for the Aussie dollar. I'll do a quick overview of the US dollar. Right now it's messy. That's the best way to describe it. We have a downward movement and what could be seen as a corrector phase into a wedge. Let's go into the weekly. So that's your downward movement. And now this could be a corrector bounce with a diagonal ending wedge, which is typically bearish. We do have divergence. So that reinforces a potential bearish ending wedge. What I don't like about it is we exceeded the 61.8 Fibonacci. We've gone past 78.6. Normally, I would expect a turn between this range. We still haven't got it. Not to say we won't get it, but there is a possibility that it's a false divergence. We could break out from this wedge and retest the highs. So that's possibility one. Myrene, which is still, as usual, 70-30, is still the downside. So I'm guess Myrene is that we break down from this wedge and we renew the downward trend, which originally started when Trump took power, which is exactly after Inauguration Day, December 2016. So since then, the US dollar is being sold off when Trump took power. I see this whole range movement as corrective, and I'd like to see the trend resume. If the trend resumes, which I think it will, we will see a retest similar to the Aussie New Zealand. We will see a retest of this low. And if we do see that, it will be very bullish for gold. So I'm watching this to see how I want to trade gold. If we break up, gold will sell off. And if we break up, we'll need to retest this high. And then we'll see. It could be a double top. So that's one possibility. But if we break down from this wedge, then it's very bullish for gold. And of course, it'll be very bearish for the US dollar. But yeah, we shall see. So that's the opportunity for Aussie dollar. That's the opportunity for US dollar, which is tied to gold, which is what I like at the moment, based on the uncertainty and the volatility we're seeing. With the US dollar, I am also liking it against coffee. And I kind of, although coffee is not a Forex pair, I'll kind of go into why I like it. So it all begins with the USD real. So if you're trading coffee, the major coffee producer would be Brazil. And so I like to look at the strength of the real against the US dollar to give me an indication of which way coffee is going to go. So that's where a Forex trade kind of informs you on the commodity trade. So with the real, what we have here is a potential first top, second top, third top, and a fourth top. So a decline from the top. This is a rejection candle, and it's so far playing out quite nicely. So you're asking, what does this mean? What's the correlation with coffee? Well, if this plays out, and this is a strong rejection, and we keep selling off, that means the real is gaining strength. If the real is gaining strength, I would expect coffee prices to rise. So let's look where coffee is at. Coffee has bottomed out near a significant support area. So to me, it's considerably oversold, and it's looking relatively cheap. It is at a major support level, and I like to see a bounce and a start of a new uptrend, at least to, I don't know, say 120 for the first leg. So I'm watching the real on the Forex pair very closely, and thus far I'm liking what I'm seeing. We have a rejection candle from the top, a potential follow through if we break through the weekly pivot. So that blue line is the weekly pivot, and if we do that, I would see that as short-term bearish, and that will be a good long opportunity for coffee. So if I see a continuation of this rejection from the top and we continue going downwards, as in we're gaining strength on the real, then I'll be looking to buy coffee, either the futures contract or potentially an options contract over 2 to 3 months, targeting potentially the 120 area for coffee. And this is on a weekly chart, so it may take a couple of weeks or months to play out. So I like it towards the November time frame. So for the short term, I'm bullish on coffee. Again, I'm looking for confirmation on this Forex trade over the next week. So potentially this coming week. And if we keep seeing that sell-off, then it's going to be an easy buy for me for coffee. Target of 120, stop loss below the low. So around, just around 90. Which is just below the support zone. yeah, so good win, good